Hello and welcome. You tune into Market Fatafat with me, Ankita Saxena, and with me as always is Sharad Dubey. In the next 1 hour, we'll get you all the top buzzers in the trade on the back of news flow or on the back of technical charts. But first up, let's take stock of how the market is shaping up. Sharad, forget about red or green in the market. Today, the color is pink for us.
That's right. The clarity is coming in the color pink, and of course, we are twinning as well. There's a lighter shade of yours in pink, but the market's health also. The entire health is in pink. Now, if you look at the numbers, Nifty, of course, the day's high levels, almost 25,175 mark, and a strong recovery also coming in, of course, all throughout the day itself. Nifty Bank also, there's a reason to cheer. And you can see a strong support coming in from heavyweights as well as stocks such as Axis Bank, IndusInd Bank as well. Nifty Bank up almost 300 points in the day's trade. And interestingly, if you look at it, the advanced decline ratio, that is still, you could say, even Stevens in the current market scenario. But nevertheless, after yesterday's kind of a fall, there was a good short covering coming in both the Nifty and the Nifty indices, as now the entire focus actually comes on to the earnings as well. Of course, three important Nifty earnings which we'll be looking out for. This includes Dr. Reddy's, Infosys, and even Tata Consumer Products, which will be in focus, and all these stocks are in a range as well. But a good start to the market. The market's health is in pink, but we'll go ahead now. Ankita?
Right, Sharad, I think we're going to have a lot of pink puns today on the show. There's a pinky promise happening between US and Japan also, which has given a big fillip to the market. The trade deal that has come through, and on the back of that, we also see the auto pack that is doing very well. But enough of pink puns. Let's move on and get on board. Nagraj Shetty, who's the technical and derivative research analyst, HDFC Securities, who's joining us on the technicals. And we have both Rabinder and Kanishka, as always, from our research team joining us. Hi, good afternoon to all of you. Thank you so much for joining us. Let's get started with the show and all the top buzzers in trade today. First up is M&M Finance, that's in focus today. Of course, that's in focus on the back of its June quarter results. The stock recovered from the lows of the day in response to the results, but the company's net interest income increased 19.7% from the last year to 2,267 crores. On a sequential basis, the core income grew 5.4% and the net profit for the period increased 3.2% from the same quarter last year to 530 crores, but declined 6% from the March quarter. Now, elevated provisions led to profitability for the company being impacted. The provisions for the quarter increased 44.3% from the previous quarter, and while its pre-provisioning operating profits increased 19.3% on a year-on-year basis, stressed assets witnessed some increase from last year, with gross stage 3 assets estimated to be between 3.8% to 3.9% compared to an estimated 3.7%. On the back of results, M&M Financial is trading, seeing selling pressure with cuts of more than 2.5% in trade.
Well, yes, earnings impact also coming in for M&M Financial, but Nagraj, Bajaj Finance is in focus. It was one of the top gainers during the day initial part of the trade for Nifty Index as well, and tomorrow earnings are also expected to kick in. I expect that there will be a strong set of numbers coming in this space. What are the technical charts suggesting just ahead of the results, Nagraj?
Good afternoon, Sharad. Bajaj Finance has been in a constant uptrend over the last few months. Chartically, what we can observe is higher tops and higher bottoms, the strength of an uptrend, and currently the stock price is placing at the hurdle of around 970, 975 levels. Though market showed some violence during this recent time, the stock stood firm and showing resilience during broader market weakness. I think this inherent strength is indicating that more upside is likely to come. Currently trading around 963, 64 levels. I'm expecting this to move towards the 1020, 1025, which is the next set of resistance would come in.
Bajaj Finance expectations is numbers would be strong going ahead, but broking stocks, especially Angel One, Motilal Oswal, are in focus. Interestingly, new algo norms are kicking in from August, and this is coming as a guidelines from NSE as well. Now, net the impact would be that higher compliance numbers might be coming in, the cost might be on the higher side, and yesterday we saw a small momentum coming in from the broking stocks as well as BSE and CDSL, which we saw, and this is coming on the back of news that Jane Street's restrictions have been partially lifted from SEBI as well. But do remember the overall earnings which have come for broking stocks in Q1, they are still under pain, because of the regulations made by SEBI on the F&O front, and of course there was a decline in the turnover which we are seeing. In that basis also, a lot of moving factors and volatility coming in the entire capital markets theme as well.
All right, moving on then. The next counter, Colgate, an earnings candidate, a couple of brokerage notes that have come out. Rabinder, take us through all of that.
Colgate is in focus. The company has announced their Q1 number in yesterday during market hours, and company reported a weak set of numbers in yesterday. And today brokerages has come out with the note, and most of the brokerages has cut the target price on Colgate. Kotak Security has maintained their sell rating, and they have cut target price of rupees 2,360 as compared to earlier target price of rupees 2,535. They say that the overall volume declined to approx 4% year-on-year basis, which is led by 5% decline in the toothpaste volume, and they have cut revenue by 2 to 3% and earning by 3 to 5% to factor in the subdued demand momentum and elevated competition. They have revised the EBITDA margin forecast are still in the management guided range. So back of this, Colgate is in focus, and the stock is down more than 4%.
Of course, Colgate Palmolive on back of broking downgrades and a weaker earnings coming in stock, seeing cuts of almost 4%. Nagaraj Chambal Fertilizers is the next stock, and kind of a up move coming in after a long time. You could see that there's a movement happening in the fertilizer space. Not much announcements coming in the government part, but of course the parliament session is on, so we might expect something in the fertilizer space. How are the technical charts are looking like for Chambal Fertilizers? Important levels to track?
Yes, chartically is showing sideways range movement over the last few weeks. What we can observe on the chart is last 2 months downward correction in the stock price is nearing to end. Currently showing upside breakout of the smaller range. The stock is currently trading around 560 levels. There is a hurdle of a larger band, sideways band around 570, 565, 570. I think the overall chart pattern today's up move with rise in volume is also indicating another positive bias for the stocks. I'm expecting this to break above the consolidation band of around 570. On that basis, I'm expecting another 60 to 70 point upside after the upside breakout in the near term, where the next important resistance could set in.
All right, moving on from Chambal Fertilizers on the charts to IRFC, an earnings candidate. Kanishka, that has posted a good set, in fact, of numbers. The stock is responding by trading up almost 2.8% in trade. Take us through the fine print of the earnings then.
That's right. So like you pointed out, IRFC has reported a very steady set of numbers in Q1. In fact, it has come up with its highest ever quarterly income and PAT as well. Now, net interest income, that rose about 10.7% on a year-on-year basis to 1,753 crore rupees, while net profit, that matched that growth, coming in at 1,746 crore. Asset quality, that also remained good with zero gross NPAs, and net interest margin, that improved to 1.53% from 1.42% sequentially. Now, key profitability ratios also strengthened. ROA rose to 1.45% and ROE touched 13.28%, which is the highest in 5 quarters. Now, with disbursements of 2,492 crore rupees, IRFC continues to show stability in its financials despite largely flat AUM trend. And on the back of these earnings, IRFC continues to be in focus, which has trading nearly 3% higher as we speak.
All right, so that's IRFC on the back of a steady set of numbers coming in. But let's move on to the next counter that is in focus, and that is MGL. And that was trading up almost 3% in the morning trade as it reported its results. It has succumbed to all the selling pressure. It's currently trading at the day's lowest point with cuts of almost 1% now. Now, the net profit rose by 29% from the last quarter to 324 crores. The company reported a revenue of 1,976 crores, which was 6% higher from the previous quarter's 1,864 crores. EBITDA was up 28.4% from fourth quarter to 485 crores, and the margins for the quarter saw a 440 basis points expansion from the last quarter. That was at 24.6%. So on the back of results, MGL is also in focus, has given up all those morning gains, currently trading towards the lowest point of the day.
Well, yes, MGL on the other hand is on the lower side, but from the same space itself, MRPL is in focus. Of course, the numbers were on the weaker side 2 days ago, but yesterday there was a buying coming in because of a strong commentary from management, and now you can see upgrades are coming in, and stock itself, look at it, Nagraj, what are the views on it? Another 7% up move coming in the day's trade. Is it a good time to do a profit booking on this counter, or should somebody stay with this company?
Yes, Sharad, the overall chart pattern is indicating more upside is likely for this MRPL in the near term. What we can observe on the chart is a consolidation moment, and the stock has surpassed the 200-day EMA decisively in today's session, placed at the upper end of the range moment of the last 2 months. I think the overall chart pattern, even rise in volume during the upside breakout, all the pointers are suggesting that more upside is likely for the stock. This is just why we can say this is just the beginning of the upside of the after a consolidation. So the next upside resistance would be around 165, which could be achieved in the next couple of weeks.
Well, important resistance levels coming in for MRPL at 165. Of course, the fall which was there in the earnings, it has actually recovered on that, and it has gone up more than 5% from there. But liquor stocks have been focused, especially United Spirits. Now, importantly, the eyes there on India-UK ties, and it's likely that the India-UK FTA might be signed tomorrow, which is 24th July. And PM Narendra Modi has also started his tour for UK and Maldives as well, and this augurs well for companies such as United Spirits, as some concessions would be coming forward. That's what the industry is expecting, which would augur well for Scotch sales as well.
All right, all eyes on the India-UK deal, and on the back of that, the stocks that Sharad mentioned. But let's move on to the next counter that is in focus on the back of results. That's Jana Small Finance Bank. Ravinder, take us through what the number looks like for Jana Small.
Well, yes, Jana Small Finance Bank is in focus, where a bank has reported Q1 earning yesterday after market hours, and bank reported a PAT at rupees 102 crore as compared to 171 crore, which was down by more than 40% year-on-year basis. And if we talk about gross NPA, then bank gross NPA has increased from 2.5% in Q1 FY25 to 2.8% in Q1 FY26. And if we talk about net NPA, then bank reported a net NPA at 0.9% as compared to and net NPA was stable as compared to the last quarter. So overall, a weak set of number from Jana Small Finance Bank, and stock is down over 7%.
Well, sharp cuts coming for Jana Small Finance Bank, down 7%. Thanks, Rabinder. Nagraj, LT Finance, what are your views on it? Stock has been trading in the positive side, almost up 1.5% in the day's trade. How's the technical numbers looking like? Any important levels to hold? And if it's there, will it be a positional call or not?
Technically positive, though it has placed at the higher level. Still, there is no indication of any reversal pattern, significant reversal pattern building at the higher levels. What we can saw last few weeks back was a gradual, shallow downward correction after a sharp up move, and this week it has started to move up again. This is indicating a strong upside momentum for the stock price, and even rise in volume, rise in RSI is indicating more positive bias for the stock price. So the next upside resistance to be watched is around the 235, 240 levels in the next couple of weeks.
That's L&T Finance and the charts. Let's move on then. Kanishka, you picked out Oberoi Realty for us. Brokerage notes coming out in Oberoi Realty. Tell us what do the notes say?
That's right. So Oberoi Realty is in focus today as brokerages have highlighted strong growth momentum and a robust launch pipeline for this company. Now, Antique that has raised its target price to 2,269 rupees while maintaining a buy rating. It expects FY26 rental EBITDA to exceed 1,000 crore rupees. This, it says, would be supported by contributions from the Westin Hotel. The company also holds ready inventory worth 6,400 crore rupees in projects like 360 West and Mulund. Now, Motilal Oswal, that has maintained a neutral call on this stock with a revised target price of 1,878 rupees, citing lower than expected Q1 collections but stable pre-sales. It expects launches across Borivali, Thane, Peda Road, Gurugram and more in FY26 and 27. In fact, the brokerage foresees a 48% CAGR in pre-sales between FY25 and 27. And apart from that, Oberoi Realty also had 11 million shares trade in a block today. So on the back of these developments, the stock is in focus, however, trading lower, almost 4% lower as we speak.
All right, moving on then to the next counter that is in focus, and that's Dalmia Bharat that tanking in trade with cuts of almost 3% coming in after it posted its, posted its quarter one numbers. Let's look at the numbers then. The key highlights. This is on consolidated basis. The revenue saw a marginal uptick of 0.4% coming in at 3,636 crores. The EBITDA saw an uptick of 32% at 803 crores versus 669 crores in the previous year. Margins saw an expansion of margins came in at 24.3% versus an 18.5%. So there's an uptick coming in on the margin front as well. Net profit zoomed 179% to 393 crores versus 141 crores, and we also saw an exceptional loss of 113 crores for quarter one of FY25 on Dalmia Bharat. We have given up those gains from morning, recovered from the lows, but nonetheless, Dalmia Bharat is reeling under selling pressure of 3%.
There's a slight profit booking coming in the cement space as well, which includes Dalmia Bharat. Nagraj, Godrej Agrovet, the stock has been doing well. Stock is up almost 4% in the day's trade, trading above the 840 levels. What are the technical charts suggesting?
Long-term charts are suggesting a decisive upside breakout for this week. This stock was moving in a broader band over the last, I think, many months, within a high-low range of around 800 to 657 and 700 on the lower side, 800 on the upper side. And this week it has made an attempt of upside breakout of this larger band by showing some long candles in the charts. This technical setup is accompanied with the rise in volume. Overall, the momentum indicators are showing a positive indication. I think this, for the long-term perspective, this stock is expected to move very well. Currently trading around 841. Immediate upside resistance would be around 900 levels in the next 1 to 2 weeks.
Yes, important is to watch out for when it comes to Godrej Agrovet, but another group of stocks will be in focus, especially when it comes to India and UK's FTA, which is expected to be signed tomorrow. We spoke about liquor stocks, but now we're speaking about textile stocks. In focus would be, of course, Gokuldas Exports, Urban Fashion. These stocks would be in focus as they are likely to get more announcements coming in, which would be favor for the textile export players. Apart from this, also recently the textile industry, which we have seen, the government is making a bigger push, and it was an exclusive story at ET Now, where the Bangladesh Plus One strategy is playing out, and a lot of conversations are happening with other countries as well when it comes to the benefit of the textile exporters as well.
All right, so textile companies in focus, but let's move on to the other counter that is in focus, and that is 197 Communications, which is a Paytm. It has posted its quarter one numbers. A good set of numbers coming in on Paytm. We did see the decline come in the morning, but we have recovered smartly from there. In fact, a recovery of almost 4% coming in on Paytm. Good set of numbers. Rabinder, take us through the fine print.
Well, as Paytm is in focus, the company has reported a good set of number in Q1 FY26, and company reported a net profit at rupees 123 crore as compared to a loss of 840 crore in the same quarter last year, and net payment revenue was also saw an uptick of 38% year-on-year basis to rupees 529 crore. And management in the con call highlighted that the company will stay with the EBITDA growth guidance, and Paytm has 4 to 5 times growth left. Brokerages has come out with a note, and Jefferies has upgraded the stock to buy from hold and high target price rupees 1250 as compared to earlier target price rupees 900, and Citi has also maintained the buy rating and high target price rupees 1250 from earlier target price rupees 975. So back of a good set of number and the high upgrades from the brokerages, stock is in focus, and the stock has recovered more than 4% of day's low, and stock is still up 1%.
Right, Paytm there buzzing on the back of its quarter one results. But with that, we completely timed out in this edition of Fatafat. Thank you so much, Rabinder, Kanishka, and our guests on the technicals. Thank you so much for joining us. With that, it's a wrap. Sharad and I will take your leave. Thank you so much for tuning in. Don't go anywhere. Market action continues on ET Now.